Program is sponsored by Point of View Ministries.
Bible School Radio, 91.3 KDKR Decatur, Dallas Fort Worth, and 91.3 KYJC Commerce.
Portions of KDKR's daily programming do not necessarily reflect the views of the management or staff.
Prudent Money with Bob Brooks is sponsored by the Prudent Money Foundation on 91.3.
Well, is crypto still a good investment? Today we're going to take a look. Stay tuned for Prudent Money. Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know, I do appreciate it, and I do have a line open if you'd like to call in and join the program. The number to call is 1-877-913-5357, 1-877-913-5357. You can also go to the website at www.prudentmoney.com. Send a question in, and I will get that taken care of for you. That's off the website, www.prudentmoney.com. 1-877-913-5357. Let's start off and talk a little bit about the problem for the stock market as we go through the month of January here, where it seems like it's almost just started. It seems like it just started and it's just about to be over with. But the market is showing an interesting predicament that investors are really going to be facing. And if you watched, the market was down today. The NASDAQ was down just about 1%. The Dow Jones close to 0.75%. The S&P 500 close to 0.75%. Nothing huge. But once again, January supposedly is a pivotal month for the markets. You want to, if you're bullish, which is positive on the markets, you want to see a positive return in January, and you could probably still see a positive return. Anything can happen, right? So keep that in mind. So the bottom line is, you don't want to see very much in regards to weakness, and yet the market was down today. I think that if you watch CNBC and keep it on during the day, or you go to find out what's going on with the market, the headline is, markets are concerned that Federal Reserve Board will over-tighten. What all that means is the markets are concerned that they're going to continue to be aggressive in raising interest rates. Because what the market does not like to see, and really that's not big news. I mean, the market's been concerned about that, but what the market is really concerned about is the fact that economic numbers have really started to come in looking fairly negative. Like the retail shopping numbers for December. You know, December is obviously Christmas, a great time for retail, a time for the vast majority of retailers to make a good bit of their money. I don't know what percentage, but I'm sure it's a big percentage of the total year comes in December. And consumers said, no way, don't want to spend my money. So here's where I think is the problem for the stock market, is that you've got, on one hand, you've got the Federal Reserve aggressively raising interest rates, and there's been a lot of chatter about that. A lot of chatter about we're going to raise the federal funds rate above 5%, which is a big jump still. And then you've got interest rates that affect the economy are not going up, they're going down. So let me tell you what that means, okay? It may be hard to understand, but let me tell you what that means. When the Federal Reserve Board lowers or raises interest rates, you want to see what interest rates are doing in the economy. So the theory is that if they lower them, then they have control over the interest rates in the economy, and those interest rates will go lower. If they raise interest rates, then interest rates are going to go higher. What's going on right now, and this is really important to understand, what's going on right now is simply this, that the Federal Reserve Board is going to continue to aggressively raise interest rates because they're trying to fight inflation. And if you look at what's happening in the markets and the economy, interest rates have been falling, not going up. This is the media is hardly even covering this. So what's causing the economic weakness is inflation. Now, what would normally, if interest rates were going up and the economic indicators were showing weakness, that would make sense, right? But that's not happening. It's getting the pressure from inflation, which comes back to the whole idea of inflation's been sustainable. It's just sticking around. It's not going anywhere. And that is what is going to overall weaken the consumer, which is going to weaken the economy, which is going to put the economy into recession. And interest rates aren't even going up. What happens if they get so aggressive with interest rates, they all of a sudden force interest rates to shoot back up, and it doesn't really do anything to inflation, and now you've got high inflation, high interest rate. I mean, it's all out of balance. It's not working like it's supposed to work. And I think that the markets, of course, they're not going to get into this kind of detail mostly in headlines and in your pop culture finance pieces. But I think that that's what's happening. Is the market is looking at it and going, here's the Federal Reserve Board. They are raising interest rates. It's not fighting inflation. Inflation is still going. It's still maintaining the same rates it's maintained. And that's starting to drag the economy down. And we haven't even felt the full effect of higher interest rates in the economy yet. So that the notion would be, once we start to feel the total impact of interest rates going up in the economy and inflation still hanging around, because right now you've got the Federal Reserve Board aggressively raising interest rates and nothing happening to the economy interest rate wise yet, and it's already weakened. I hope that makes sense. I know that was a little bit. It'd be easier to draw it on a board and show you visually, but it is a problem, and I think the market's starting to realize that and looking at this from the standpoint of because if the market is weakening and going into a recession, you expect the Federal Reserve Board to put a safety net under the economy by lowering interest rates, but they're raising interest rates. And the market's already heading maybe into a recession. It's an interesting scenario, one that I don't think that the market wants to see, but it's starting to realize, hey, this could be a real problem. 1-877-913-5357. I know you'd rather hear me say positive things about the market. I'm just telling you what I'm seeing. Could be right, could be wrong. Just telling you what I'm seeing. And all that means is I don't think we're out of the woods. The positive news to this, though, is once we get over all of this, and no telling how much time it's going to take, but once we get over all this, it'll be an incredible opportunity to invest into the market. So that's maybe that's something good. 1-877-913-5357. Well, if you were invested in Bitcoin, which is a cryptocurrency, digital currency, You've had a pretty rough time following November 2021 until December of last year. However, if you were invested in crypto for the 2 to 3 or so years ahead of November 21st, you were happy. In fact, it made a whole lot of investors millionaires, at least on paper. It was, we've talked about it many, many times. It was the cryptocurrency, Bitcoin in particular, was forming into the ultimate investment bubble. Talked about that a lot through last year and the year before. Well, between November 2021 and December 2022, just a little over a year, cryptocurrency crashed. Bitcoin lost 72% in that roughly 13-month period. 72%. Then from the middle of December up until today, it's up 27%. Pretty good return for such a short amount of time. So the question is crypto a trustworthy investment? Because what has come out is stories of fraud, stories of money that's been stolen, all the kinds of things that come out during investment bubbles. Quite honestly, I mean, if you look at the history of investment bubbles, you'll see that while the investment in question is going up higher and higher and higher and higher, there's a lot of fraud taking place. Then when it crashes, that fraud typically gets exposed. More on that in a minute. 1-877-913-5357. This is Bob Brooks. Stick around. I'll be right back.
The Word for Today is excited to announce the new official online home for the ministry of Pastor Chuck Smith and Kay Smith, PastorChuck.org. At PastorChuck.org, you'll have instant access to thousands of hours of verse-by-verse teaching by Pastor Chuck Smith from Genesis through Revelation, and full access to special messages on subjects such as prophecy and much, much more. Also at PastorChuck.org, a full library of great teachings by Kay Smith, and a section where you can read some of Pastor Chuck's books online, all free of charge. So visit the new official online home of the Word for Today and the ministry of Pastor Chuck and Kay Smith, PastorChuck.org.
Some people try to ignore it. Others believe it was invented by religious dogma. So, is there really such a thing as sin? Well, Friday on Focal Point, Pastor Mike Fabarez talks about the reality of our sin nature and how it affects each and every one of us. A challenging edition of Ask Pastor Mike, Friday on Focal Point.
8:30 a.m. on Bible School Radio 91.3.
Dr. Charles Stanley.
Let me ask you this. Have you ever said to him with all of your heart, without a reservation, God, whatever you want me to do, wherever you want me to do it, whenever you want me to do it, ever how long, my answer, God, is yes? You ever told him that?
In Touch with Dr. Charles Stanley, helping you grow in Christ every day.
Listen daily at 12:30 on Bible School Radio 91.3.
Welcome back. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. 1-877-913-5357. I do have a line open and would love to hear from you if you got a question for me today. 1-877-913-5357. So Bitcoin was in an obvious bubble. I mean, it follows the same path as bubbles that have preceded it, where people get excited about an investment, they all pile into that investment takes off, gets on just crazy returns, grows and goes up, and typically the asset, you're just really trying to figure out why it's going up to begin with, because it maybe doesn't do anything. But there comes a point where even with the stock market that you look at it and go, there's no way the stocks are worth what the stock market says they're worth, which was last year, or the year before last, in 2020, what the message was. Because I believe the stock market was in a bubble. In fact, that's the problem that we face today, is that the bond market, the stock market, Bitcoin, I mean, you name it, it was the bubble of all bubbles. It was the asset bubble of all bubbles. Yeah, I don't think any time in history have we ever seen a situation where you had all major markets in bubbles of their own. So the question is crypto a good investment? When you see all the fraud that's been revealed, and that comes with just about every bubble that you can imagine. Back in 2007 and 2009, when the stock market was going into a bubble, Bernie Madoff was exposed for that was the biggest fraud in financial history. There's been some huge frauds exposed in the cyber currency markets recently. In fact, I saw one cyber currency lender that was about to file for bankruptcy yesterday. So is it a trustworthy investment? That's to be seen. It's tough to know. But let's go and look at what happens in a bubble. So let's go back to 1929. 1929, the stock market this was the biggest bubble on record, I believe. 1921 to 1929, the market took off. Now, most people in the 20s were farmers, had their land, had their money tied up in their land, they're farming, and farmers were piling into the stock market right and left because everybody thought the market was going to make them rich. In fact, it was making them rich on paper. And it was called the Roaring Twenties. I know you've probably heard it referenced that way. In fact, there's a book called The Day the Bubble Burst. I'm not really sure. I think you can probably still get it at Amazon or someplace like that. A fascinating behind-the-scenes stories of what really happened and all the fraud that occurred and everything that went on during that bubble. Well, 1929 was the top of that bubble. And it started to crash, much like Bitcoin crashed. And ultimately, it dropped from 1929 to 1932, it dropped 85%. Now, between November 2021 to December 2022, Bitcoin dropped 72%. And of course, there was tons of fraud that was exposed. And one of the big problems of the 1929 stock market drop was there was no regulation really on the ability to borrow money against your stock market account, which is called a margin account, and reinvest the money. Today there's regulations on it. They limit the amount of money you can do. They keep it pretty much in check. But back then, that wasn't the case. So you had a situation where, especially in the farm community, they were borrowing money against their land. They were taking that money and they were putting it in the stock market and borrowing against their accounts. And market was going up, so it was okay. But when the market started going down, let's say that they had debt greater than what the value of their account was, so they had to sell down. And oftentimes, well, probably the vast majority of the time, because people didn't know what was going on until the next day when the newspaper came out, and wouldn't know. I don't know. In fact, I don't know how that they actually knew. But investment companies were taking these margin accounts, and they were selling them to get their money back. So people were going from being millionaires back in the 20s to flat broke and lost their land. And I mean, there was extreme poverty. And this all happened because of an investment bubble. Now, what those two time periods have a lot in common, but the main thing that they have in common is that stocks were not really regulated back in the 20s, and neither is Bitcoin or cyber currencies. It's something that Congress has been, the SEC or whomever would do it, has been threatening to do, but they allowed a bubble to form and a bubble to burst and fraud to happen because there wasn't proper regulations in force. So which is two similar situations that have panned out the same, is that a lot of this fraud probably could have been avoided. And there's obviously the Bernie Madoff situation, where for decades he ran an investment company that was supposedly invested in the market, and basically he was using investor money, billions of dollars, to run his company, falsify statements, falsify accounts, and live off that money. And billions of dollars. A lot of nonprofits were hurt. I mean, it was a huge deal when they realized that what they thought was money that was there was no longer there. But I can't imagine what regulation could have stopped that. I mean, if you look at it and you think about it, because fraud, now his fraud went on, his Ponzi scheme went a lot longer than most do. But still, many people lost everything, or lost a good bit. Of course, he went to jail. He recently, or the past year, died in jail. In fact, the SEC received a letter from an investment manager entitled "Bernie Madoff is running a Ponzi scheme," or "Here's 18 reasons why Bernie Madoff is running a Ponzi scheme," and he uncovered the elaborate scheme in a long letter to the SEC, and nobody followed up on it. Nobody paid attention to it. They just ignored it. So something was going on there. It's tough to say, but obviously that doesn't make any sense why somebody wouldn't investigate that. In fact, he had actually been audited by the SEC several times and passed his audit, which was very unusual. But the bottom line is, yes, it could be a good time. If it is a good time to put money into crypto, and I'm not suggesting that or recommending that, and if you were to even think about doing that, I would do it at a very, very, very small. I mean, this is about as close to gambling as you can get in the investment world. But if it is, I'm not suggesting that Bitcoin is done falling, because I believe it's got way more to go, especially if it's playing out the investment bubble and not going away, which is also the other possibility. It could be going away. But let's say that it's not. It would take off just like it did like stocks did in 1932, and become an investment that carries on for generations to come. It's a little too early to determine that, but it is I wouldn't say a viable investment opportunity. It's about as speculative as you can get. That's why I'd be very careful in looking and say, oh, Bitcoin's up 27% over just a short period of time. that can all be gone tomorrow, as it is proven that it can do. So you want to be real careful when it comes to that and comes to speculative investing. And you got to ask the question, I think anything speculative, as long as it's at a very, very, very small percentage, 3 to 4%, something like that. But you can lose absolutely a lot of money. Hey, this is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. If you got a question for me, please go to the website at prudentmoney.com and send it in, because we are all out of time till we do meet again next time. Keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.